Yo, what's going on, everybody? Welcome back to another video at the Day Trading Institution. So in today's video, what we're going to be covering is the trading setup known as the break and retest. So you could trade this setup through any time frame, really, through the 5-minute all the way up to the daily time frame. Now, what a break and retest shows us is buying and selling pressure. What we're looking for and what this trading strategy is based off of is simple: supply and demand, support and resistance. So there's multiple examples that we can look for a break and a retest. Really what we're going to be identifying is a level of support or a level of resistance where price has shown us before. It is a level where, in this situation where I'm currently drawing it, it is a level of resistance. Now when price actually breaks above, what we want to wait for is for price to come back down into the level, wait for rejection where we could then look to buy the market. Vice versa, we want to identify a level of support, right, where we then see price break that level of support. We look for price to hold that level of support of previous resistance and look for price to trade lower. This works for consolidating markets and for trending markets, right? So if we have price making higher highs and higher lows, what we're going to wait for is the retest of the previous market structure higher high, and then look to take price long. Same thing when we're looking for shorts. We're looking at lower lows, lower highs. We're going to wait for the break of the lower low. Let's say you missed getting in on the pullback. We're going to wait for the break of the lower low, wait for price to come back up into the previous lower low, where we'll then take a sell, anticipating this to be the lower high point. So again, there's multiple ways you can actually trade this system, right? So the very first thing you need to identify, again, is a level of support or a level of resistance. Notice how here this is a level of support. Notice here we have support. Notice how price, and again, it's all a range. Notice how price actually broke under. So if I were to mark this off on the chart, it would look something like this, right? Notice how price actually broke under and consolidated around this area. You're looking to go short somewhere in this range where you could then take a sell to the downside. So again, notice price break support, and support held as resistance. So selling pressure in that area. Now, typically what you want to wait for, again, is the break. Once price actually breaks your zone, let's say you're trading this on an intraday time frame. Once price actually breaks your zone, you're going to draw your zone out from the lowest close all the way to the lowest low, and that's going to be your entry zone on the break and retest. All you're simply going to wait for is for price to come into your break and retest zone, look for an engulfing, and that's going to be your entry signal. Again, our entry signals do not change. If you're concerned about the entry signal and you're not too certain on what candlesticks to look for when you're going to enter the market, go back to the entry section of the course and watch that entire video. That's going to be your entry signal, and your stop loss is going to go above the zone, and your take profit is going to be your next level of support, which in this situation is down here. Now you could use this for your advantage for your breaks of market structure. So let's say price is forming lower lows and lower highs, and you have a break of a previous lower high. Simply wait for the market to come back down into its previous level of support and resistance, or your previous level of structure, where you'll look to take a buy. Or vice versa, if price is making higher highs and higher lows and you see price break your previous higher low, wait for price to pull back into the previous higher low, where you'll then take a short. It's all support and resistance, supply and demand. Right, so let's kind of go look for some examples here on this. Let's just leave it at 30-minute time frame, right? So we know on this 30-minute time frame that we have an entire range here. Notice how we have a previous lower high point here. So what I can then do is draw this out, right? And how everybody's going to draw it out is going to be very differently. So once price actually broke above, you want to wait for price to come into your zone, which this is the zone. Let's say I was going to take a buy somewhere along here, right? What you could do is, if you're trading on a 30-minute time frame, you could use the lower time frame to make an entry. So if you're going to be trading on this 30-minute time frame, you could use the 15-minute or the 5-minute to make an entry into the market here. And here you have a medium probability bullish variation pattern. So you could have made an entry here at this medium probability after the first rejection, right? your stop loss under the zone, and then your targets could have been your resistance level, which could have been anywhere between up here or here, right? So really it depends on the pair that you're trading, right? Because over here you can see price actually ended up, and this is something for you guys to actually keep in mind, right? Just because you see price trading under it, you want to wait for the candles to close under. This is not a break of the level. What would make this trade invalid, this break and retest invalid, is if price actually ended up closing under and then you had another candlestick close under. That would make the break and retest invalid, and in a situation like that, you may want to look for a Fibonacci setup there. But notice how price on the hour time frame, or let's go to the 30-minute time frame, maybe even the 15. Notice how on the 15-minute time frame, price actually closed under, right? And if you go to an even lower time frame, you see more detail. It looks like price actually broke under. But if you go to this hour time frame, price closed in the zone and then closed back above, making this break and retest still very, very valid, right? Now, let's say we go to let's go to a different pair. Let's go to GBP USD. Let's say we go to this 4-hour time frame. Right here you have your previous structure low. What you could see is price actually pulled up into the previous level of structure where it immediately had a nice big engulfing. Now, if you're going to take this as a swing position again, right, confluence, right? So we have the big engulfing to the downside. What else do we have? We could use a fib. 61.8 at our break and retest zone. So again, we're adding the probabilities factor into this trade. Even though you could have taken just the break and retest off of that trade solely, it's nice to have more confluence, right? Then you have a high probability bearish variation. So what do? You enter the market here with your stop loss being above the zone and your targets being your original low down here. And as you can see, this gave you a 2.6 risk to reward ratio. There's many ways you could potentially trade this. Like you could have probably even gone down to a 30-minute time frame. Here you have another medium probability setup. But just keep in mind, right, you could lower the risk while increasing your targets at the same exact time. Just keep in mind, right, if you're basing a trade off the 4-hour time frame, the lower the time frame you go to make an entry, the more aggressive your entry is going to be. So if you're somebody who's a little bit more conservative, then you may just want to only focus on the 4-hour time frame. So there you have your break and retest there. Now where it gets tricky is sometimes the break and retest doesn't always play out. As you can see, you had a break and retest here, which could have potentially played out for you here. You had a retest of it again here with an entry signal, but this trade just simply wouldn't have played out. And if you would have taken that loss there, then at that point in time, okay, the break and retest didn't play out. Let's see if maybe a fib will play out. And you can see price pull all the way back to the 618 where you actually saw it play out in the future after that, right? And again, I see a break and retest right here. So let's go to the hour time frame, right? Notice how the market is trending bullish, making higher highs and higher lows. So this right here is a previous level of support, right? If you go to the hour time frame or the 4-hour time frame, my apologies, what you see is this previous level of support right here, where you can even mark it off with a random line as well, right? So let's mark it off with a random line, right? What you see here is resistance, support, resistance, right? If I were to highlight this, you can see there's resistance, you can see there's support. Notice how on this 4-hour candlestick, right, it came all the way back up to our resistance level where sellers came in the market and price closed under resistance. That should be a self or a confirmation for you to start looking to go short. What you can then do is bump it down to a 30-minute time frame and see what that looks like. What you would have seen is a very nice bearish variation pattern where you could have taken the trade off of. Right, let's say you didn't get in up here. What you can always wait for is a break and retest. There's always going to be a break and retest that typically plays out. So your stops go above the high, and then your take profit again, your nearest level of support and resistance, which would be really right here would be the nicer area. As you can see, we get a 3.7 risk reward ratio. Then price went all the way back down. But notice how we kind of tied it all together, because we initially saw the level of minor support right here on the 4-hour time frame where you're like, oh, hey, here's support. Notice how price just finally closed under support. Let's wait to see if we have a break and retest set up where price will come all the way back up, retest it, and if we get a rejection, I'll start looking to actually sell the market. Now, notice how on the hour time frame, it looked like price closed above, But all this simply shows us is an overlap. Because remember, when it comes down to support and resistance, we have our touch, we have our gap, we have our overlap. Once price actually ended up closing, let me get rid of this. Once price ended up actually closing back under support, that is a sign of rejection where you can then make your entry in the market. And you can even pull a fib from this point to this point, and you would have seen that overlap of the 618 on fibs, where you could have then added more confluence. We have a break and retest with a 618 on our Fibonacci retracement tool, meaning that we have a decent enough pullback for us to look to enter the market. Now, when it comes to fibs, again, you have to remember that fibs is going to be considered a form of a discount. Now, let's say we're going to continue to trade this intraday time frame, and we caught the move from here to about down here. What do you have right here on this hour time frame? You have, again, another break and retest setup. Right here you have support, and notice how price closed under, and then this candlestick closed under. You go to like a 30-minute or 15-minute time frame, then you're like, let's see what the 30-minute or the 15-minute looks like. We know that this is support on the hour time frame, and price closed right under. Let's wait and see if we can get a break and retest of that level there. Where on this 15-minute time frame, you have a little bit of a double top pattern. Notice how price closed under here, right? This is the break right here when these two candlesticks closed under. Notice price come all the way back up into the zone, and then you have your first rejection here. Then you have a second rejection here, which could be confirmation enough for you to actually take the trade. So let's say if you would have entered here, your stops would have had to have gone above this high up here, right? And then your take profit could have been down here for 2 times your risk, which would have been a nice day trade, a nice intraday setup here that would have taken about 18 hours for you to initially hit your overall target. Or maybe you would have closed somewhere down here in this range, right? It really depends. And if you would have held that, you would have had a bigger, nicer risk to reward ratio. And then you have your break and retest on the higher time frames. You guys got to remember though, just because you see a break and retest doesn't mean it will always play out in your favor. There's going to be times where the break and retest looks very clean, but it's not going to always play out in your favor. Now, what we can also see here is we're on a daily time frame right now. This is silver. Here we have support. Notice the break under. What you can anticipate is always a break and a retest. Notice how price came under, hit our support. So what you could have potentially done is waited for price to come, retest that, go to the 4-hour time frame, right? You have to keep in mind where you're trading at the 4-hour time frame. Notice this double top pattern here. We have the first retest, rejection, price came back up. Again, this is still a valid rejection here. Why? Because we have our touch, our gap, and our overlap. Support and resistance, supply and demand is going to be considered a zone. Look how far price traded up into the range here, but then started trading lower. Once price actually closed under resistance, you could have started looking for a sell signal, which there's many ways you could have potentially done that, right? But there you go. You have a break, and then you have your 2 retests of that zone here, and how you would have ended up catching this move later on would have been up to you as a trader to identify how you want to take that setup. And again, look at this. We have support. What do we wait for? Resistance. Look at resistance being completely rejected here. Notice the 3 rejections to the upside. Break it down to a 4-hour time frame. What does that look like? Momentum is slowing down. And then look at this big engulfing candlestick here. Once you would have seen 1, 2, 3 rejections to resistance, you go on the daily time frame and you see that a doji has formed. You're riding under that 50 SMA quite nicely. You go to the hour time frame, let's say, right? And you basically use multiple time frames together. Look at this bearish variation off of that level. You could have entered right here with your stop loss being a little bit above that level of resistance. Your take profit is going to be your next level of support. As you can see, you would have made 3 times your risk here. Very, very simple. Now here you go. Look at another example of a break and retest. Here you have support. This entire white zone is support. You could have sold at resistance each and every time price came to resistance. So we have resistance all throughout this range here, right? Notice the immediate rejection of this area. So if I were to draw a random line from here to here, you can see price came right up, retested, rejected. You could have gone down to a 30-minute time frame, looked for an entry confirmation, which let's go back to here. Let's see if we would have gone an entry confirmation. Here you have a medium, or this is actually high probability bearish variation pattern, right? And you could have taken this trade here where your stop loss could have been above the high a little bit there, and then you could have potentially gained a max of 3 times your risk on this position. Is the break and retest still valid? Yes. Why is that? Even though price came all the way back up into resistance, one, we didn't break structure and we're maintaining under this retest level. We're maintaining under support. Once we start trading above, it's no longer valid and we'll start looking for buys. But you could have sold each and every time. Let's say you would have sold right here at this bearish engulfing, which is a very nice bearish engulfing. Your stops, again, have to be above the zone. Your take profit is your next level of support. It would have taken a few days for this trade to play out in your favor, but ultimately what's more important is that this trade would have taken 1 day and 19 hours. So leave it at 2 days of holding that position. This is where your job as a trader is almost done. Once you make your entry, you set your stop loss and your take profit, all you have to do is sit on your hands. Yes, price would have almost stopped you out, but more importantly, it hit your take profit for almost 5 times your risk just by following the same strategy. Now notice the break under this level here, right? Again, this is a level of support. Notice the break under this level of support. Wait for price to come back into support. Once you have the confirmation that price held resistance, stop loss above support, and then your take profit is your next level of support. What we're doing is we're trading from zone to zone. And here you go, clean trade, 5 times your risk. This would have went into your favor almost immediately. And this trade would have only taken 2 days and 15 hours to play out, to catch almost 9,000 pips and make you 5 times your risk, right? And then so on and so forth. Now let's look at it from an intraday level, an intraday perspective, right? Notice here how we have the lower high. This is exactly what I was just talking about here in trending conditions, right? We have a lower high followed up by a low, or whatever, a lower low, whatever the case might be, is we have a break of the previous lower high. In a situation like this, you want to wait for price to come back into your previous lower high after a higher high is formed, and then you're going to target your next level of resistance. And that's exactly what happened here. Notice the break of the lower high. Notice how price came down into your previous high, rejected, right? And you could have just looked for an entry after this candlestick here closed, right? So let's say you would have gone down to like a 15-minute time frame or a 30-minute time frame, right? You go down to this 30-minute, you see that price closed above. This would have been too late for you to make an entry. But once you would have seen that second retest, because remember, this structure just simply looks like this. Right, 2 retests. As long as support would have held, you could have looked to make an entry. In a situation like this, I would have taken the long position somewhere after this bearish or bullish variation pattern, where I would have put the stop loss under this wick here just to give price a little bit more room to breathe. Then the take profit could have been either this high right here for 2.5 times my risk, or this high way up here for 6 times my risk, right? And you can see that played out very, very nicely. Now again, let's take another look at an example. In this situation, you would have lost at a break and retest. Why is that? Because here you have your entire level of support, you have the break, you have the retest, and then price continued to go down, but it would have stopped you out. And you just have to understand that's going to happen sometimes. You're not going to win every single trade. More importantly, if you would have gone to a, let's actually go back to where we were, right? We were around, was it this range? Or was it more over here? No, it was definitely way more over here, right? Let's say we were around this area, right? And you can even see a break and retest over here. I lost where we were previously. I believe we were right here. Yeah, we were right here, right? More importantly, let's highlight this so we don't lose it again, right? You know you have your major level of support down here, right? You go to a daily time frame, you would have seen this big rejection to the downside and a double bottom on the daily, and then maybe in that situation you probably would have looked to buy. Who knows? But more importantly, this was a rejection of support, right? Notice how price is rejecting support now. So if I was waiting for a trade setup here, what could I possibly wait for? Well, I could say, hey, I'm going to wait for the break of this resistance, the retest, and then I'll look to take a long back up to my next level of resistance. Very, very simple setup, guys. Again, all we're waiting for is that break, retest, and then we'll look to take price in the favor that price is actually trading in. Why? Because when price is breaking resistance, typically there's more buying pressure, so you only want to look to buy. When price is breaking support, typically there's more selling pressure, so you will only want to look to actually go short. Anyways, guys, hopefully you guys understood this setup. Very simple setup, but we're going to be going over the next few setups in the next future videos.